G'day folks, Jim here from FX Charts, Monday the 14th of April. Thanks for tuning in. Well, the dollar having it finished on a relatively steady note on Friday, pretty much ignored the sell-off in equities. But some comments from Mario Draghi over the weekend tying the exchange rate, euro exchange rate, to monetary policy has sent the euro a bit lower in the open this morning. Elsewhere it's pretty steady. The Aussie and the Kiwi, they both have their uptrends intact. Dollar yen's not doing an awful lot, and sterling looks a little bit heavy. We'll go and have a look at the charts. And as you can see from the euro this morning, we've got a gap. The euro went very early down to 138.30 and has recovered to sit right on this FIBO support here, the move up. But we've got a gap up to the Friday's close at 138.85. There wasn't a great deal of activity on Friday. The euro was unable to push higher. It did get up to 139.05, but came back, and now it's looking a bit heavy on the hourly charts, and we'll have to wait and see what Europe do when they get in. But it's hard to see the euro recovering too much. But ideally, this gap should be filled into 138.85, and I think on the day of that, if we do see that, it's probably a sell. Moving further out to the 4-hourly charts. We've, as you can see, as I say, we're on this FIBO support here. Now, the yellow FIBO area is the retracement levels from this move, the greater move up. So if we can break down through here, this 138.5 level below the session low at 138.30, then we could be headed all the way back down here to sort of 137.80 or so. I'm not sure that we're going to see that in the short term, but the 4-hour charts are pointing a bit lower. In the meantime, we've got some support here. This is a 50% pivot of this move up here, so that'll provide some support, and that's around 138.15, 20. So I think it's going to be a bit of a choppy day, but further out, the dailies don't really look as though they're pointing mildly higher, but there doesn't seem to be any real momentum behind the move. So I think we've got Easter coming up on Friday. The market's going to thin out pretty much before then, so I don't think we should expect too much. Having said that, we have got the US retail sales today, as well as the EU industrial production before that. We've got US retail sales and business inventories. Now, the retail sales are going to be pretty important. The market's looking for about 0.6, 0.7% month-on-month increase. Anything below that will have the dollar back under pressure, but a good number will see the dollar continue to make some gains, and we might, if we can push down below the 100-hour moving average, which is that's a 138.30. It traded down there before the retail platforms were open, but the further support comes 138.15, and then around the 200-hour 50% pivot of the move up at about 137.85, somewhere around there. So I think selling rallies is probably the order of the day, but I'm not expecting too much, and really we've got to wait for Europe to come in to get any real sense of where it's heading. Now, dollar yen is doing absolutely nothing at all. I think probably the less said about that, the better. As long as it holds 101.20, then the 4-hour charts look as though they're trying to recover a bit. We're sitting on this 76.4% FIBO support of the move up from here. We're trying to break lower, but I'm not sure today's going to be the day. There's no data out at all. The hourly charts, they're pretty flat. They're not telling us an awful lot. So I think if we saw a rally to above 101.80-90, we got the first FIBO support, first FIBO resistance up here about 101.95, roughly where the 100-hour moving average is. So I think that'll be a sell on the day. But the blue line where the 101.20 support comes in, there's a double bottom there. If we go through there, then I think we're probably heading back down to where sort of 100.90 area, and below there, then it could get a bit interesting, but I don't really expect to see that today. The 200-day moving average is about 100.75, which was in line with this previous low just here. and I think we're possibly headed there in the next few days, but the dailies are pointed low, but I'm not sure that today's going to be the day, and I think 101.20 to 101.90 will probably cover it. Sterling. Sterling on the hourlies is looking a bit toppish to me. I'm not sure if we're forming a minus or head and shoulders here with a neckline just above 167. If we broke that, then I guess we're headed back down. The measured target would be somewhere around somewhere around this 166 30 40 area. But in the meantime, while the euro's not doing an awful lot, I don't think cable's going to head too well. There's no cable data out today. The hourlies are not suggesting a great deal. However, the 4 hourlies do point lower. And on the 4-hour charts, the first FIBO support is around 166.85.90. Below there, we've got the 38.2, which ties in with this rising trend support. That's around 166.05. So once again, I prefer to trade it from the short side at the moment. But having said that, I don't think the dailies are still positive. If we can take out this 168.21, we've been there twice now. We're not going to do it today, but I actually prefer to sell rallies. If we can eventually break the rising trend, then maybe the 100-day moving average down at 165. Don't think we're going there yet, while the dailies are still reasonably positive. But if we did see it down there, I suspect maybe a buy again in the days ahead. But we'll look at that as it comes along. Dollar Swiss, well, that traded pretty heavily into the Friday's close. Has recovered a little bit this morning, given the weaker euro, but it's not really carried on with any gains, and it's sitting here. It's doing very little really. The hourlies are pointing a little bit higher. The 4 hourlies look as though they're trying to recover, but if we go underneath Friday's low at 87.43, I think it was, somewhere around there, 87.41, then we're probably heading back down here to this 87, the figure area. The dailies are pointing a little bit lower, so that is a possibility. But the 4 hourly charts and the hourlies are not suggesting we're likely, and I think we're probably today just going to sit around here, wait until Europe comes in and see which way the market takes the euro, and go along with that. In the short term, actually, I think I'd probably be a buyer of dips under 87.40 or 87.50, looking for a retest of somewhere around 88, the figure, but not much more than that. The Aussies got up to 94.25 on Friday in London, which surprised me a little bit, up to this 94.20. Having looked heavy all day, it lost those gains going into the New York close, and it's sitting just below the New York closing level. It's about 80. Where is it now? At 90. It's back up at 94. The figure. It's been down to 93.75 early on today. So maybe we are going to head. The longer term trend is definitely intact. Actually, we're probably going to see that on the 4. That's intact, and as long as we can stay above 93.5 at the moment, then I like buying the dips. Below there, would probably see a deeper correction back to, well, first of all to about 93, and then to sort of possibly 92.75, which once again I think will probably be a buy. Now the 4 hourlies are not suggesting that that we're actually going to go much higher than this today. So I'd be pretty surprised to see 94.25 taken out on the session. But likewise, we might have already seen the low down at 93.75. There's not an awful lot out today. The Chinese foreign direct investment numbers are the only ones out. We've got the RBA minutes tomorrow, and we've got the fair bit of Chinese data on Wednesday, being the retail sales. What else? We've got the CPI, urban investment, a couple of other things, I think. But it's going to get a little bit thin as we head toward Easter. But the overall game plan seems to me still to be buying dips in the Aussie. Likewise, the Aussie crosses, I think they're probably still heading lower as far as euro and sterling and Swiss franc are concerned. So I like the Aussie against all of those. Aussie yen I'd leave alone. I don't think that's just going to chop around. But I like to be short of all those crosses and along the Aussie. And eventually, if we take out this 94.60 level, which we're not going to do today, I don't think. I'd be surprised, as I say, to see it much above 94.25. But if we do take out 94.60, then the next upside is the 76.4% fall of this this fall here, which is at 94.98, I think it is 94.94. There we are. And then, of course, the head and shoulders objective, which I've said before, it seems to me somewhere up about 95.80, and I'd be squaring up all long positions if we got up there. The Kiwi is choppy within this sort of not above the 200-hour moving average, 86.40 to this high up here at 87.40. It's been chopping around there without any real movement. It's just been taking people out of positions really. The hourlies are flat, and the 4 hourlies look as though they could have a bit more downside. They're still trying to unwind a bit, but I don't think we're going anywhere really today. Not a lot of Kiwi data out this week, so it's all going to be reliant on what happens elsewhere. So we've got the RBA minutes tomorrow. That might push Aussie Kiwi around a bit, and likewise the Chinese data on Wednesday. But the dailies are still positive, although there's beginning to show some bearish divergence perhaps here. Although we're making new highs, there's some bearish divergence. So I'd be a little bit careful about buying a break of the top side here. I'm not sure we're going to do that. And maybe just through Easter, we just let me just go back to the 4-hour charts. We just consolidate in this sort of area here, going nowhere fast. But I still think the Kiwi can head higher. If it breaks this FIBO support here, so at 86 the figure, somewhere around there, then I think we're probably heading down to lower levels. I guess the first real support doesn't look to be into this low here, which is about 85, 10, 15. So I'd be a little bit careful. I don't think it doesn't look at the moment as though we're going to break the rising trend support. So still buying dips down to sort of 86. The figure probably is the game plan, but with a stop loss, I would say below so 85, 70. So that's about it today. As I said, we've got a little bit of data out headed by the US retail sales, but the main focus will probably now be on how Europe sees Mario Draghi's comments over the weekend. There's been a couple of other ECB board members talking the euro down. It didn't have much effect last week, but maybe Mario Draghi will have more of an effect this week. But having said that, the market's also looking at the fact that any US rate hike looks to be delayed now until mid to late 2015. So the US dollar is not going to be running away to the top side either, I don't think. Anyway, that's about it for today. Have a very good one, and we'll talk to you tomorrow. Cheers.